North American stock markets have just closed after a brutal day of trading. They took a massive tumble.
In New York, where Wall Street took another dive today, the Dow fell roughly 2,200 points, about 5%.
Thursday's losses making this the worst two-day streak for the market since the early days of the COVID pandemic.
President Trump says the markets are going to boom.
In the world of finance, emotions and information can turn everything upside down in a single moment. April 3rd, 2025 was such a moment, one that will be etched in history as a defining day for the U.S. stock market. On this day, the U.S. market lost over $3.1 trillion in a single day, marking its worst performance since June 2020, during the height of the COVID-19 pandemic. The stock market's capitalization evaporated, with Wall Street experiencing what may be one of the most traumatic days in modern economic history. This drastic move, labeled Independence Day, was intended to protect American manufacturers but caused widespread chaos, impacting nearly all stock market indices, from the Dow Jones to Nasdaq and from the S&P 500 to tech giants. This sharp market collapse has raised questions. Where will this lead in Washington's political circles, and how will it affect global financial markets? The tariffs, which have affected nearly every sector, from automotive to energy, software to agriculture, are now sparking fears of full-blown trade war. The core question remains: what does this Independence Day truly signify, and what consequences could the Trump administration's protectionist policies have on the wallets of the American people and the profitability of corporations? Is the loss of $3.1 trillion just the beginning of a deeper crisis? The United States, known for its innovation, technology, and leadership in global finance, opened the door to turbulent times in world trade when President Trump announced new tariffs on April 2nd, 2025. While the White House touted this policy as a way to free American industry from foreign competition, the results were far from promising. The market crash on April 3rd reflected the immediate impact of this decision, with over $3.1 trillion in market value vanishing in just 24 hours. Major American corporations like Tesla, IBM, and Apple were among the hardest hit, signaling a direct reaction to the Trump administration's policies. Apple, heavily reliant on Chinese components, saw its costs soar and its stock price plummet. The company's executives warned that these tariffs would inflate costs and threaten employment. This sudden market meltdown prompted many analysts to look into the underlying causes. The loss of investor confidence suggests a potential for broader economic uncertainty, especially in light of Trump's decision to impose sweeping tariffs. The S&P 500 saw a sharp decline of nearly 5%, marking its largest drop since June 2020. The Dow Jones and Nasdaq also posted steep losses. Retail stocks, such as Nike and Lululemon, took significant hits, and the U.S. dollar depreciated sharply, falling to a 6-month low. The immediate effects of the tariffs were felt globally, as markets around the world also experienced declines. In Japan, the Nikkei 225 index fell by 2.7%, while South Korea's Kospi index remained relatively flat. European markets and oil prices also suffered, with fears of a global slowdown dominating the sentiment. As the tariffs continued to take their toll, analysts began to revise their growth forecasts, with many now predicting the possibility of a recession. Wall Street economists raised the probability of a recession to 60%, driven by the new protectionist policies that could weigh heavily on U.S. trade. This uncertainty prompted some of America's allies to consider retaliation. French President Emmanuel Macron and Canadian Prime Minister Mark Carney indicated their countries might respond with tariffs of their own. Despite the negative reactions, President Trump remained confident, asserting that the tariffs were a step towards making America richer and more self-sufficient. However, his approach faced significant opposition from major American business groups, including the Business Roundtable, which represents large U.S. companies such as J.P. Morgan, Apple, and IBM. These groups warned that the tariffs could harm American manufacturers, workers, and families by raising prices and increasing uncertainty in the business environment. The economic impact of the tariffs was also evident in public opinion. A poll conducted before Trump's announcement found that only 28% of Americans believed the tariffs would benefit the economy, while 58% felt they would have a negative impact. In the face of these concerns, Trump dismissed the criticism, claiming that the country would soon see the benefits of these policies. Economists have long warned that high tariffs could disrupt the U.S. economy, raising the cost of everything from cars to wine and destabilizing America's position in the global market. Despite these warnings, Trump has continued to argue that tariffs can stimulate the U.S. economy by encouraging consumers to buy more American-made products and reducing the trade deficit. As the situation unfolds, the risks of escalating tensions are clear. Trump's tariff policies could lead to a global trade war, reshaping trade patterns and potentially driving the world toward a recession. The path ahead remains uncertain, but one thing is clear: the economic fallout from these decisions will continue to be felt for years to come.